Welcome to the Safe Wheel live stream where I share my P&L on 3 accounts and I share my proprietary Safe Wheel trade system for free here. All right, can you guys type in the chat that you can hear me okay? I want to make sure my audio is working. And also be sure to post any questions you might have about the Safe Wheel or any questions you have about options trading, anything you want to ask. Be sure you do that. Some guy says, sounds good, thank you. Okay, so I know you guys can hear me okay. Let's get into the earnings edge. What happened last week? You can see my earnings edge account here. It's got $9,025.62 in there. Thank you guys for telling me you can hear me okay. Let's go to the spreadsheet so I can look at the overall stats. Okay, last week traded JPM, lost $224. So again, keep the losses as small as I can, keep the wins as big as I can get them. So my record since inception, 34, 21, and 9. Now, since I've done the update in late October, 14, 14, and 6. So you can see that it's about a 50, not about, it is exactly a 50% win rate. Average win 945, average loss 496. And 2022 number is 63%, S&P minus 19. Now this is more volatile than the S&P, much more volatile. So on a risk-adjusted basis, if the percent returns are equal, let's say, for example, in 2023, let me make sure that, what was my number there? Let me put that in there. 9025. Look at that, they do kind of match in 2023. Let me put the right number in for the SPY, 428.31. 428.31. Okay, so the S&P is outperforming a little bit this year, but on a risk-adjusted basis, the S&P is outperforming by a lot because this is more risk. There's a lot more risk in the earnings edge. But you can see this earnings edge has got a lot of volatility. I could be up 20% next week, 30% next week, just depends on what kind of trade comes out. I could be down also, of course. But when you look at the total, since the beginning of 2022, up about 80%, where the S&P is down almost 10%. So the S&P is still down from its all-time highs back in 2021. And we're in October of 2023. It's going to come up on 2 years where the S&P is still down, hasn't recovered. Okay, so that was the earnings edge. Let's go to the Premier level 5. Let's see where we're at here. Look at the account for the Premier level 5. By the way, I do have a Premier level 5 masterclass, and the cart is open currently. I think I have about 8 more slots left, and it's going to close out tomorrow at midnight. What's today? Monday. So tomorrow, Tuesday at midnight. All right. So 35,852. Let's put that in there. 35,852. 35,852. Okay, the PL5 got since inception 22 wins, 8 losses, 8 break evens. I've got 2 open trades right now, and the numbers I started trading it on April 8th, 2022. So live, and you guys have seen my P&L, and it did 12.2. The S&P was down 6.39 since then. Or I'm sorry, in 2022. 2023, you can see we're doing about half the return. Make sure that number is right. 428.31, 12%. Yeah. So we're doing about half the return of the S&P, but we have about 1/4 of the drawdown. So on a risk-adjusted basis, still outperforming. But if we look at the overall total since inception, trading it live in a real account, up 19.5% versus the S&P, up 4.84% since April 8th of 2022. All right, next let's get into the safe wheel, and that would be this account here. Oops. Sorry, this account here. You can see that I'm trading DraftKings DKNG. I've been trading it for quite a while, maybe a year. You guys might know better how long I've been trading it. I don't really pay too much attention to that, to be honest. I just trade what's in front of me. Let's see, how is this account doing? We're at 6638. 6638. Now this has about the same volatility as the market. So when you look at the returns, you know, you can see which one's outperforming. So the S&P is outperforming by about 3% this year. Last year, the safe whale outperformed the S&P by 40%. Very significant outperformance. So you can see total, if you were to, since I've been doing the safe wheel live right in front of you with real money, it's up 32.7%, where the S&P is down 9.82. Okay, so those are the actual numbers and results. Let's see, what are we going to do this week? So first question is, do I own any shares? And the answer is yes, I do. And what's my cost basis? $30.50. Okay, so knowing that, or my assigned price, I should say, not my cost basis, but my assigned price, $30.50. I've got my long call already put in place. I did that on Friday. And now I have my put hedge, where I own 3 of these. And a couple questions on that one. Number one, am I under 100 days left in this position? And the answer is no, so I don't need to do anything on that account. Then the other is this strike price within 70% of the actual price of DKNG? Which, yes, it is. So it's actually in the money. So definitely is. So yes to both of those. I don't do anything with my put hedge. It's looking good. Now, everything is basically taken care of, except for now it's time to run the traditional legacy wheel. And I want to sell against my assigned price or better. I have 100 shares. So I want to sell against $30.50 in the near expiration cycle. So let me take a look at that. Here's the nearest expiration cycle. I want to sell a call against the $30.50 strike. I can get $26 for it, and I want to get $30 for it. So I can't quite, there's just not quite enough premium to sell that. So I'm going to open up tier 2, and I'm going to sell a put. And the $28 put I could sell and get my $30 for it approximately. So I'm gonna go up 1, right? And I'm gonna sell this $28.50. So I'm gonna sell one of these. Oh, I just quite couldn't sell premium today on the covered call. All right, so what my sizing? Sizing's critically important. The underlying that I'm trading is between $20 and $40. And my account size is between $5,000 and $10,000. So I sell one legacy traditional wheel, one contract, and with the put hedge, I do 3 times that. If I had $10,000 to $15,000, I would do 2 legacy whale contracts and 6 put hedges. So there's your sizing. So every $5,000 you would size up. All right, let's see. I want to sell this for as much as I can. I'll go for $48. Okay. Probably won't fill. Let's see if I can get 47. And that's not filling, so I will go to 46. And did I press the wrong button? Maybe. I don't see it in there anymore. So let me start over here. I should be able to get 47 for that at 28.50. Good. Oh, filled. Uh-oh, filled two of them. It didn't make the noise. I guess I had my audio turned down. So this is interesting. I made a mistake. See how I accidentally filled two? What do I do? This is a good lesson. I get out right now. I literally just take this, create opposite order, and I buy it back. And then I look, turn my volume up maybe. I'm not sure why that happened, why it didn't make a noise. And I buy this thing back and get out of here. There, it filled. Okay, good. All right, so yeah, I paid a little more in commission maybe. So made a little bit of an error, but typically when you make an error, you just fix it right away. You just get right back out. So should have only one position short, 28.50. And there we go, good. All right, so maybe that cost me $1 or something like that. No big deal. All right. Now let's get to any questions. You guys have any questions about anything? And that's really good. I'm glad that you guys saw that I made an error there. This thing wasn't chiming. It didn't give me the noise that I normally hear. So I didn't think it filled. I thought the order went away. And then it was, then I doubled up the order. As you can see what happens when I make an error. I just trade right back out right away. That's why I like very liquid underlines. You see how that was very liquid? I was able to sell it for 47 and buy it back for 46. That's why you want to stay in liquid underlines and with liquid options. All right, let's get into questions. See if you guys have any questions here. I know the questions are typically on delay, so a lot of times you guys ask a question and it might take 5 seconds or something like that for the question to come through because of the live stream's on delay. All right, so G. Shepherd says, good morning, good morning. This is more. Would you consider this last couple of years a sideways market? Last couple of years, I don't know. Let's see. We have SPY and the chart. If you want to look at it, we've been going sideways since, yeah, 126 of 22. So it's been about a year and a half of about a sideways market, if I'm correct. Is this SPY? Yeah. So yeah, I would consider it, you could consider this a sideways scenario here for the last year and a half. Yeah, for sure. Let's see, Richard, why YINN is another ideal trade for the safe whale. Let's look at that. You said YINN. That doesn't ring a bell for me. Oh, it's an ETF, directional share ETF. Is it leveraged? No. Let's see here. YINN. See how it's not very liquid, between 10 and 15 cents. Let's say I would have got in and out that mistake trade that I made. I would have sold for 45, and then I would have had, and then I would have had to buy it back for 35. I would have lost $10 right there on the spot. To me, that's not liquid enough. And also, when you get to these 3 times leverage, you see how it's a 3x. I don't like those. Also, I like to trade stocks because I like it when they come into earnings. Sometimes I can get into a stock where it's a little bit stagnant, and I like for stocks to come into earnings. So I would not trade this. Okay, so let's see here. Well, at least you did not buy 3. Yeah, Well, that would have cost me $3, right? This is more excellent example of what happens in a live account. Mistakes happen. Another reason you need to see the real P&L. Yeah, exactly. If you don't have a lot of experience, some instructors don't really have a lot of experience doing what they're doing. They pretend like they have a lot of experience, and so they probably make a ton of mistakes behind the scenes that you don't see. G. Shepard, do you have a class, I'm assuming, for a safe wheel? Yes. There's a link in the description of this video, and I do have the safe wheel available. If you want to get on the fast track for the safe wheel, instead of learning it slowly by watching the live streams, I have the fast track, and it has a flow chart that tells you exactly what to do and when, because I have not crossed over every scenario in my live account, and there are a lot of other scenarios that could have occurred, and maybe you're trading a different stock and a different scenario occurs. So there is that fast track with the safe wheel link in the description. Yeah. Richard said spreads are wider in yen. Yes. Yep. And also, I like to trade stocks that come into earnings too. Do you have a class, so the safe wheel or video on YouTube? So I would start with the very first video, because that's when I'm opening up a new position with a safe wheel, and I explain a lot of things from the very beginning, which was January 2022. But there's a lot of content there on the safe wheel, and it's a lot quicker to just go in and get the course. The course is really done really well. I redid the whole thing. Martin, could you also sell a call at 30 to get at least some additional premium? I could do that, but my assigned price is $30.50. So if I get assigned, I get my shares called away, I lose money. I'll lose 50 bucks. And I'm not willing to do that. I don't want to take that loss. And if the stock continues to go down, I have my put hedge to cover me for that particular scenario. So I would not sell something below my assigned price. G. Shepard says, thanks. Thank you. Okay, guys. Do you guys have any more questions? I don't see any more here. I know it takes a few seconds for the questions to come in. So make sure you ask me a couple of your questions if you have any, as I start kind of winding things down. Also, there's a link in the description for the Earnings Edge alerts. The cart is currently closed on the Earnings Edge, but I may reopen it. And the cart is going to close on the Premier Level 5. If you want to get that, the cart's going to close. But on that, actually, you probably won't have access to that. You need to get access to the where I share a lot about that, and I have a lot of training on it. You need to get to the training before you can get to the link for the course. So if you guys were on the list for the training and you saw the training, you only have about another day to get into the course. Okay. Whoops, sorry. Do you expect any problems or snags with Schwab taking over TD Ameritrade? I've heard of a lot of people that are in my community that have gotten into Schwab, and I haven't seen any issues. So I don't expect any issues. I don't think they're going to change the format or the program or the Thinkorswim. I mean, that would be dumb. So, I mean, that's the reason why everybody uses TD Ameritrade, in my opinion, is because of Thinkorswim is such a great platform. So I don't think they're going to mess with the platform. Will, I'm having a lot of luck with my earnings straddle with hedges for the volatility crush through earnings. I'm not confident with my back tests as you do. Always curious what you come up with. I haven't. You mean you're curious about some of the back tests I've been doing lately, or you're curious about, because that sounds very similar to the earnings edge. I think you kind of tweaked it a little bit, and I haven't back tested what you're doing, so I'm not sure what you mean. Martin, so this is a continuation. He said, could you also sell the 30 and get some additional premium, and selling at a 30.50 to get some additional credit or premium? I could sell at the 30.50 and get, well, where are we here? I could, where's my suck? 30.50 and get, an extra $25, $22 or whatever. I could do that. But for me, I want to make sure I get enough premium. So I have like a rule. There's got to be some type of cutoff where you're willing to sell premium and you're not willing to sell premium. Mine is 1%. So meaning around $30 for this $30.50 strike. So yeah, I could sell and get, some extra premium, but I prefer to make sure I get enough premium when I sell it. And I do have to have some type of rule in place. Otherwise, how am I going to backtest? I can't backtest something that's subjective. I've had a really difficult time to get to the earnings edge orders to go through. That's interesting. I execute pretty easily. Sometimes you're going to have to pay a little bit, or pay a little bit more. So, because the liquidity when you're trading, 4 legs is a lot lower than trading 1 or 2 legs. So, you might see the mid price at $6, but you might have to pay $6.05. So maybe that's why. So you might have to pay up a little bit to get filled, but it's because there's 4 legs. So your liquidity isn't quite as good. I lucked out last week since JPM was a loser. Yeah, it wasn't much of a loser, a couple $100. I mean, that's the way it goes. You lose as little as you can, and you try to hit the big wins. Will says, I wonder how you would do a volatility crush through earnings instead of just selling. Oh, okay. Yeah, that was a few years ago, probably like 8 years ago, when I had a system like that where I would maybe do an iron condor type trade through volatility, pick up that crush, and then have the longs at the back end to cover just in case, the thing blew out. And that seemed to work okay. I just never continued doing that strategy. I guess I didn't see as much upside with some other strategies. But if that makes sense, doing an iron condor into the earnings and holding through the earnings, the volatility crushes in the near, the closer to the money options, it crushes in all the options, of course. But the closer to the money options are worth more, so the volatility crushes more for them versus the longs that you own, and you can come out ahead as long as the price of the underlying doesn't go through those strikes. And I think statistically you'd probably come out ahead, but it's not, like I said, I've seen other better ways to do things. Richard, if I push the orders through, I get a bad fill, ended up losing. I wouldn't say, because if it's a bad fill, it's not necessarily going to be, for example, if you have a $6 trade and you get it at 6.05, and maybe when you lose money, you have to buy it back for $5.80. Yeah, that's a little bit more of a loss. But if you have a win, maybe you sell it for $8. I mean, it's not significant, right? That little 5-cent slippage. That's what I've found with that, Richard. All right. Any other questions? Good questions today. Okay, guys, I'm gonna end, but what I always like to say, if the P&L is not real, what else are they trying to conceal? All right, I'll be back next week. We'll see you guys.